Hello, my name is Gillian Bento. This is the second life skills assignment for the intermediate accounting class. We are going to cover chapter 13 and 14, and the company that we are going to be looking it will be Apple's. In this case, Apple current liabilities at the end of September 2016 was 79 billion, which is a lower value in comparison with the same period of 2016, in where the company's current liability were 80 billions. If we break down the current liabilities, we can observe that accounts payables increased from 35 billion in 2015 to 37 billions in 2016. However, the accrued expense decreased in 3 billions. The current portion of long-term debt increased from 2,500 in 2015 to 3,500 at the end of September. The company other non-current liabilities in their balance sheet consist primarily of deferred tax liabilities, gross unrecognized tax benefits, and the related gross interest and penalties. As of September 2016, Apple has non-current deferred tax liability of $26 billion and total other non-current liabilities went from 33 billion in 2015 to 36 billion in 2016. The company classifies gross interest and penalties and unrecognized tax benefits that are not expected to result in payment or receipt of cash within 1 year as non-current liabilities. As of September 2016, the total amount of gross unrecognized tax benefits was 7.7 billion, of which 2.8 billion, if recognized, will affect the company's effective tax rate. As of September 2015, the total amount of gross unrecognized tax benefit was 6.9, of which 2.5 billion, if recognized, will affect the company's effective tax rate. The company issues unsecured short-term promissory notes, which is known as commercial paper in this case, pursuant to a commercial paper program. The company used net proceeds from the commercial paper program for general corporate purpose, including dividends and share repurchases. As of September 2016 and September 2015, the company had 8.1 billion and 8.5 billion of commercial paper outstanding, respectively, with maturities generally less than 9 months. The weighted average interest rate of the company commercial paper was 0.45% as of September 2016 and 0.14% as of September 2015. As of September 2016, the company had outstanding floating and fixed rate notes with varying maturities for an aggregate principal amount of 78.4 billion. In the company's opinion, there is not at least a reasonable possibility the company may have incurred a material loss or a material loss in excess of a recorded accrual with respect to loss contingencies, including matters related to infringement of intellectual property rights. However, the outcome of litigation is inherently uncertain. Apple applies fair value accounting for all financial assets and liabilities and non-financial assets and liabilities that are recognized or disclosed at fair value in the financial statements on a recurring basis. Apple defines fair value as the price that will be received from selling an asset or paid to the transfer a liability in an orderly transaction between market participant and the measurement date. When determining the fair value measurement for assets and liability which are required to be recorded at fair value, Apple considers the principal or most advantaged market in which the company will transact under market-based risk measurements or assumption that market participants will use to price the assets or liability, such as a risk inherent in valuation techniques, transfer restrictions, and credit risk. Apple's valuation technique used to measure the fair value of money market funds and certain marketable equity securities were derived from quoted price in active market for identical assets or liabilities. The valuation technique used to measure the fair value of the company's debt instrument and all other financial instruments, all of which have counterparties with high credit ratings, were valued based on quoted market price or model-driven valuation using significant inputs derived from and corroborated by observable market data. In accordance with the fair value accounting requirements, company may choose to measure eligible financial instruments and certain other items at fair value. The company has not elected the fair value option for any eligible financial instrument. Increased volatility in the financial market and overall economic uncertainty will increase the risk of the actual amount realized in the future of the company financial instrument differing significantly from the fair value currently assigned to them. Apple's long-term debt to total asset ratio increased from 2015 0.17 to 2016 0.23. It may suggest that Apple is progressively becoming more dependent on debt to grow their business. Apple has about $20.4 billion in cash and equivalents on its balance sheet. The majority of the assets included in its reserve is stashed in long-term marketable securities, meaning Apple plans to let those funds accrue interest for more than a year. Almost all Apple's cash and security are stashed overseas, proceeds from sales outside of the United States that Apple will not bring back because it will then have to pay U.S. taxes. There is no hesitation that Apple is scrapping in cash with its enormous hardware sales and has plenty of ammunition for probable achievements.